Good morning, students. Hope you all are doing well, rather doing great, both academically and at personal level. And I'm sure, yes, Mustafa, thrilling morning. Yes, Shamli, very good morning. Good morning, Neeraj, Meenu. So, students, hope you all have been on your targets. You all have been solving sums, practicing every subject, revising your theories, taxation laws, revising the provisions of different acts that are applicable to you. See, when it comes to studies, what is important is that y'all always be in touch. Study is something where you have to be in touch. Sports is something where you have to be in rhythm. So ensure that if you are pursuing academics, you are in touch so that you will never be feeling off. Otherwise, when you lose the touch, maybe because of gap or maybe because of some reason where you have taken a gap, there will be psychological burden, though practically it is not at all difficult to restart. But psychologically, after a gap, generally it creates a burden to restart. So, most important point when it comes to studying, especially of professional course like ours, the only biggest mantra is being in touch. In case you have lost the touch, there is a gap, no problem. The simple mantra over there is forget that you have lost any time, forget that there was a gap or you are out of touch. Start studying as if you are starting afresh today. It will hardly take a week for you to get back in touch. And once you get back in touch, then start again practicing, again solving, again revising, so that you will get into the rhythm of the practical part. So students, with this small gyan, if I can say, let us go back to our subject, our topic. I'm sure by now you all have this sheet. Yesterday I've also shared one more sheet, which is for the MCQ based questions, which is based on case scenario. Now, we discussed budgets. In budgets, we are in the fixed budget category till now. Today, we'll start the flexible one also. In the fixed budget, if you remember, we discussed that there are two types of budgets. One is the functional budget, where you prepare budget for each function separately, which we have been doing. And the other is the combination of various functions, that is the master's budget. We only discussed about production cost budget. Solving was there in the homework sum that we'll be checking and discussing today. Now, when it comes to functional budgets, what is important is we all agreed, accepted that functions are interlinked. So you need to ensure that whatever functional budgets you are preparing, they are aligned to one another. Means the quantity of one will determine the quantity of another. That is a simple meaning of being interlinked or aligned. Now, when they are aligned, when they are interlinked, the question is you have to select the starting point, that is which budget will come first. And for this, we discussed an important theory concept, which was that the budget or the factor which is creating the highest limitation on your work, on your activity, that will be the starting point. and it can be any one of these functions. This factor, which is creating the highest limitation, is also called as the key factor or the principal or key budget factor. In marginal costing, this factor is generally your material, labor, machines, that is all your inputs. Whereas in this chapter, we are going by the assumption that you have sufficient quantity of inputs, you have sufficient production capacity. What is the highest limitation creating factor is the sales. Hence, all our budgets start with sales budget. Though when you study marginal costing, over there, you first budget one of these factors, and from that, you decide production and sales and everything. So that is the only difference, and that is how these two chapters are also linked. So you have to keep that linkage in mind. Now, our work starts from preparing the production budget, which is only in quantity, and the production budget is nothing but your trading account in terms of quantity, which will start with the sales plus the desired closing stock minus the opening stock. So the balance is your production quantity. So this is how you remember we have been solving this and we have devised this format. Then once you have determined your production, on the basis of production, we'll determine your inputs. So we determine how much material quantity will be consumed, how much labor hours will be required. Both these budgets will be prepared using the standards. Standard means how much of raw material quantity is required per unit of output, how many labor hours are required per unit of output, and simply by multiplying this production quantity that you have derived by the number of units of material required or by the number of hours of labor required. When you simply multiply this production quantity that you have devised in the first budget, you will get your labor hours or your material quantity requirement. So that will become your input budget. In case of material, since material has to be also purchased and that has to be done periodically, on the basis of this consumption quantity or the consumption budget that we have determined, we also find out what will be our purchase budget. Now, this purchase budget is determined using this concept of raw material account. So if you remember, in your raw material account, you have on the credit side the raw material that will be consumed for production. To that, you will add the closing stock. From that, you will subtract the opening stock so that you get the purchase quantity. Now, this purchase budget will be both in quantity and in value, because whatever quantity you have determined, when you multiply it by the purchase price, you get the purchase cost. This we have been doing in many of the sums, so you can see that. So the raw material consumption that you have derived from the raw material consumption budget, that quantity will be the starting point in purchase budget. To that, you add the desired closing, subtract the opening, you get the purchase quantity. Multiplying it by the price, you get the purchase cost. So this is how we determine these budgets. Yes, definitely. There will be overheads budget also. There will be machine capacity, utilization budget also. But these budgets are not discussed practically, though in reality, all these budgets, because all your inputs which will be required for your production will be or will have to be budgeted so that the company will know which input, how much they will be requiring. But we are not having those as our practical sums. We have only material and the labor budget as our practicals. Now, while determining the production budget, you require stocks. While determining the material purchase budgets, again, you require stocks. Now, for stocks, there are two types of questions. One, a straightforward question where the stock figures would be given in the question. So where stock figures are given, you have to simply take the correct stock figure and you have to, I will say, put it in your format or in your formula. But the second type of question is the stock figures are not given. You are given some word adjustment. or a adjustment in language where you have to understand and interpret, and whatever adjustments or the language says, accordingly you will determine. Like in this first question, this stock, the closing stock of raw material was given as 2 days consumption. Now, how you'll find out this stock? So we have already calculated consumption. This sum was for a month. So this consumption quantity is for a month. And they have given how many working days are there in a month. So we divided the consumption quantity by the number of days in the month. So you got 1 day's consumption. Multiplying it by 2, you get the stock, because the policy of the company was to maintain 2 days stock as their, 2 days consumption quantity as their stock. Similarly, in this another sum, the stock was based on next month's sales or next month's consumption. So on that basis, we determined the closing stock, and the closing stock of this month would become opening stock of next month. Here always the question is how to determine the opening stock of the first month. So for that also, you remember I had explained that the same policy is applied. You go back to the month of March, how they would have found out the closing stock of March, obviously on the basis of April's sales quantity or April's consumption quantity. And whatever is the closing stock of March will become the opening stock. It means it is directly linked to the same month's figures. If you remember this, then there is nothing left in production and material budget to be understood. Yes, every sum will be different in terms of the word adjustment, as you would see in question 3, question 4, what I had given you for homework. But as far as the formats are concerned, as far as the logics are concerned, nothing is beyond this. But yes, there would be some sums where some new language adjustment, new word play is given that you need to understand and interpret. Is this fine, students? So this was a brief revision. Today we will solve the homework sums so that you'll also get the feel of this production cost budget, which is one of your master's budget. Then we will also discuss your cash budget, which is another master's budget, though you'll be studying that in detail when you study FM. And then we will go to the next part of our budgeting chapter, which is the flexible budgets. Fine, students? So let us start. Yes. I hope there are no doubts or questions. If there are, please put it across. So I go to question number 3, which is one of your homework sums. Now, it is purely a word adjustment sum. So let us understand what question number 3 says. It says the following information relates to the third quarter and the fourth quarter for this year. So here the details are quarter wise. Now, importantly, when you read the question, you realize that third quarter is already done. So you are already having the actual figures of third quarter. And for fourth quarter, you have the estimates. And that is what is in fact required in the question also. You have to find out the budget for the last quarter. Now, you will commonly find this sentence given in many questions, even in accounts, even in FM. What it says, production and sales occur evenly. What is the meaning of evenly? Evenly means, see, when we are budgeting, we may be budgeting for a year, or here it is budgeting of a quarter. But within the year, there are multiple months, multiple weeks in which you do the business. Similarly, in a quarter, you have 3 months period in which you are doing business. We presume, keep this in mind, we presume that my every days, every weeks, or every month's activity is at the same level. Same level means I will be having the same production every day, every week, every month. That is what is evenly. So when you say anything is happening evenly, it means if the annual figure is 1,20,000, we presume that divided by 12, every month it will be 10,000. It means 10,000, 10,000, 10,000, 10,000, 10,000. Every month it is even. This assumption is required. Otherwise, you may have different figures month-wise and the calculations may change. But for simplicity, We always presume the same thing in accounts. If you remember few chapters, like I'll give you example where you have assumed this. We have assumed this in the chapter where you determine the closing stock. Let us say it was the chapter of uh, insurance claim, or you determine the partner's drawings interest or the partner's capital interest. In all those chapters, we always give this assumption. Same thing you will find in FM. So wherever a data is given for a period, this assumption is always there. Now, coming back to the question, now see how the question has been drafted. Purposefully, they are giving you a lot of data. You need to understand and determine what is the requirement of this question. So here they have given sales, which is in value. And that is where we get stuck up in this question, because for our format, we start with production budget, and production budget starts with sales quantity, not value, but they have given value. Then they have given you the inventory details, both of raw material and finished goods. So there are two raw materials, A and B. For quarter third, they have given you opening balance, closing balance. For finished goods, again, there is only one finished good, means your output is only one item. They have given opening, closing, but this is not necessarily required by us because this is opening, closing for the third quarter, which is already concluded. And our requirement is doing the workings for the fourth quarter. Fine. Then they have given you unit cost data. Now, students, very important. I always say this in every class that you should be reading the question properly. Properly means when you are reading, you should be able to understand, you should be able to decode what the question is saying, what the data is given. Because until and unless you understand that, you will not get the way forward. Now, what is this data? It says unit cost data. Means this data is the data of my cost per unit of my product. So for every unit of my product, what would be the cost? Correct me. It means if I have to make 1 unit of my finished goods, how much raw material A I will require? 10 kgs, for which the purchase price is 3. So per unit of final product, I will incur rupees 30 as raw material A cost, rupees 10 as raw material B cost with this breakup. Then labor, again, I have two departments. So in first department, 5 hours of work is required. In second department, 2 hours of work is required. This is the wage rate. Please understand, decode the data, because this data will be useful in many sense. And then you get your labor cost per unit of your final product in each department. Overheads are charged using some ORR. ORR is overhead recovery rate. So for the first department, it is 12 per machine hour. For the second department, it is 10 per labor hour. Correct? Now, selling and administration overheads charging rate is also given. Profit margin is given. Now, all this data is your cost sheet data. See, these things should come to your mind when you are reading. Now, they are saying that you are required to prepare the production budget, the purchase budget, labor is not asked, and finally the production cost budget. But my challenge is I'm stuck up with the starting point of this sum. Why I'm stuck up? Because I require the quantity of final product. I require the quantity of sales. But for the last quarter, I'm given sales value. So if you remember, in the last class at the time of conclusion, I had mentioned that you will find out sales quantity by this formula. Sales divided by selling price. So total sales divided by per unit price will give you the quantity. So it means I have to first do the working of calculation of selling price. And how this will be done, I'll simply prepare cost sheet per unit. Yes, Jaya, correct. Mustafa, I think Mustafa had given me answer that day itself. Yes, Shamli, correct. Very good students. Yes, ma'am. So what I will do is I'll prepare a cost sheet which is per unit. So raw material A, B, already costs are given 30, 10. Then direct wages, machine shop, assembly. Here it is how much? 20. Here it is 10. So this becomes my prime cost 30, 40, 60, 70. Then I have factory overheads or production overheads. Again, department wise, machine shop and assembly. It is 12 per hour. So 12 per hour means how many hours are there? 5. So 5 into 12, this will be 60. How many hours are here? 2. So 2 into 10, it will be 20. So I get my factory cost or my production cost. So 60, 130, 150. Correct. And then to this, I will add selling and administration. It is 20% of this cost. So it is 20% of 150, which is 30. So my total cost is coming as 180. Profit margin is 10% on selling price. Now, 10% of selling price. So you know simple maths, it is 1/10 of selling price. Now selling price is not known. Now you know this calculation. If it is 1/10 of selling price, it will be 1/9 of cost. Correct? So it comes to this. My selling price is 200. Now once I get selling price, I can find out sales quantity. Now for which period I want sales quantity? I want sales quantity for the last quarter. So I'll take sales value of the last quarter. It is 660 upon 200. So it is 3,300 units. Right, students? So I get my starting point. Then I find out my production budget, which is in quantity. And it is for the last quarter. Correct. Budgeted sales 3,300 plus desired closing minus opening. Now I want all this for finished goods. But interestingly, purposefully, they have given you opening, closing, and closing. Now this is where you have to be reading and decoding the question. Now this data is of third quarter. We are preparing for fourth quarter. So you have to look at everything vis-a-vis the fourth quarter. So I will not take this as opening and closing because that will give me a wrong answer because this is for the third quarter. I will look at everything from the perspective of fourth quarter. In fourth quarter, closing is 1,000. So I take this 1,000. What is opening of third quarter? It is the closing of third quarter. So opening for fourth quarter is closing of third quarter. So I get my production quantity, which is 3,600. I hope you all have got this. Yes, Shamli, correct. Mustafa had already given this answer. Meenu, what was 110? So you may have given some intermediate answer. Yes, Riddhi, very good. Very good, students. So it means you all are understanding the concepts. So I get my first answer, which is my production budget in quantity. Now they are asking me my purchase budget. Now for purchase, you have to first find out raw material consumption. So I'm doing it here. Raw material consumption and purchase budget. Again, the period is last quarter. Now here I will have two subcolumns because I have two materials. So raw material A, raw material B. Right, students? Now first I have to determine how much raw material will be required for production. Now how do we determine? We determine by using the standards. How? I know my production quantity. How much is going to be my production quantity? It is going to be 3,600 units multiplied by the standard. This will give me my total raw material consumption in kgs. Then desired closing of raw material minus opening stock of raw material. This will give me the raw material purchase quantity, which is in kgs. I'll multiply it by the purchase price. I will get the raw material purchase cost. Correct? Now, what is given for raw material? About. Now, what was given? How much raw material is required per unit? It is 10 kgs and 5 kgs. So, 10 kgs, 5 kg. So this is 36,000. This is 18,000. This is my consumption of both the materials. Then the closing and opening. Again, you have to be cautious. Closing stock you will take from the last quarter because we are doing it for the last quarter. So it is 25 and 15. 25, 15. Then opening stock. How I'll get opening stock? It will be the closing stock of previous quarter. So it is 23,500 and it is 13,400. Correct? Now, 36 plus 25 minus 23,500. How much it comes to? It comes to 37,500. 18 plus 15 minus 13,400. So it is 19,600. This is the purchase quantity. Right, students? Then multiplying it by purchase price. What is my purchase price? It is this price, which is of each material. So when I multiplied by the purchase price, rupees 3 per kg and rupees 2 per kg, I will get my total purchase cost. Okay. Yes. So Shambli says 1,12,500. And 39,200. So this is my purchase cost budget. Okay, Minu has also given the same answer. Riddhi has also given same. Jaya, 37,500. Yes, correct. So we all are on the same page, same answers, correct? Now, students, in this sum, you will see how production cost budget is also done. So my next budget is if you remember, I had simply said what is production cost budget? It is cost sheet. So see, this is production cost budget up to the production cost, that is up to the factory cost. What you calculate is your production cost budget, right, students? Now for this, you have to simply prepare the cost sheet. The only difference is we have prepared this, but that was per unit because we were determining selling price. Now, here I have to do it for the production quantity. That is the only difference. So the same thing is repeated, but here it was per unit. Now you will do it for your total production quantity. Now, how much is my production quantity? My production quantity is 3,600 in the last quarter. I'll just write down 3,600 units. So you have to prepare this production cost budget for this quantity, correct? Raw material, AB, direct wages, machine shop and assembly, and factory overheads, again machine shop and assembly. Now you have per unit cost 30, 10, 20, 10. Same per unit cost is required. Here it is 60 and 20. So students, these are your per unit costs. Now see, production cost budget, we have to simply multiply the per unit cost by the production quantity of that period. Our production quantity for the last quarter is 3,600 multiplied by the per unit cost. You get your total production cost. This is production cost budget. Very simple. Correct? Sorry. Right? Now, total of all this will be your total production cost. It comes to rupees 5,40,000. Correct, students. Very good. Perfect, students. Understood by all. Let us proceed. Yes, very good. Let us proceed. Now, if I have understood this, let us go to the fourth question. Now, if you see the fourth question, students, fourth question again is a language-driven question. And it is very unique. It is very different from all the other questions. What it says, a single product company estimated its sales for the next year, and it is given quarter-wise. Fine. So what does the data says? Quarter-wise sales of the 4 quarters would be this. All this is next year's budget. Now, the opening stock. of finished goods is 10,000 at the start of the year. So this is your opening stock, but at the start. And the company will maintain closing stock, which will be this. Now remember, all this is for the year, not for a particular quarter. Just keep this in mind. What is interesting is this part. The production pattern for each quarter is 80% of sales for the current quarter and 20% of the sales for the next quarter. Now, this is what is the most interesting part of this question. This is where this question is unique, very different from all the other questions. Now, here they are saying that we will be taking 80% of current month sales and 20% of next month sales, and this total will be your production. Now, if this is the case, how will you solve this? So here in this sum, my production budget, which is to be done quarter-wise. So particulars and the columns represents the period for which budget has to be prepared, which is quarters. Now, generally, what is our format? Our format is budgeted sales quantity plus desired closing stock quantity minus the opening stock quantity. You get production. But here, this production already has a pattern. What is this pattern? 80% of current sales, 20% of next quarter sales. So this pattern is already given. Now, what are the quantities? 30, 37, 500, 41, 250, and 45. Okay. What else figures we know? We know opening stock at the start of the year and closing stock at the end of the year. Be clear. End of the year is here. Start of the year is here, correct? Now, what it says, read the language again. The production pattern in each quarter is based on 80% of sales of the same quarter and 20% of sales of the next quarter. So I can determine the production from this. 80% of same quarter, so 80% of 30,000 and 20% from here, that is 30,500, 20%, which will come down to 7,500. I hope everyone is clear with this. Am I right? Understood by all? Now, the total production will be this, right? For the first quarter. Okay, Shamli. Okay, Minu. Perfect. Now, what would happen in the second quarter? Now 80% of this. So 80% of this, sorry, is coming as 30,000, and 20% of this will be for my second quarter sales, sorry, production is this. Correct. So wait na beta Anil, give me some time na. We'll get everything. Let us first start getting whatever figures are available. Once you get that, you'll reach to the difference. Now, 80% of this. How much will be 80% of this and 20% of this? Correct? Now, problem is my last quarter. Why? Because I have current quarter to find out the 80%, but I do not have the next quarter to find out the 20%. So by this, I cannot get the last quarter's production. Had I got the last quarter's production, my work would have ended here, but it is not ending. No problem. Let's see what we can get. Right? Now, interestingly, I have not got the last quarter's production by this pattern, but if I now try to complete the table, I may reach somewhere. So what I will do, now I will start completing the table. Now in this table, I have budgeted sales, I have opening stock, I have production. I can very well find out this as a balancing figure. You agree? So in first quarter, with the help of the figures available, I can find out the balancing figure. If you understand this, you can give me the balancing figure. Will it be 11,500 students? Perfect, Adil. Yes, me. Now this balancing figure has to come here as opening. Now if I have opening stock again, will I not be able to find out this balancing figure? So again, I'll get the balancing figure here. Right, students? Now my balancing figure again of the next quarter's closing stock would be, yes, correct, Mustafa. Yes, correct, Shamli. Very good. So it is 12,250, which becomes opening here, right? Now, once I get opening here, I will get closing again for the next quarter, which will be again, yes, Mustafa. Correct. Minu, Jaya. Yes, correct, Adil. Yes, Tanu. So next quarter's closing, I will get as 13,000, right? And once I get 13 here, now what was missing can be now found out. So with this, I will reach the production, which was the missing figure. Right, Anil? So what you were looking for, you get the answer, right? So how much is my closing here? 53. Is this my production? Correct? 15, 8 to 50. Correct. So this is my production, 53 to 50. Yes, very good, everyone. Correct. So I get the production, students, for every quarter. But the methodology was slightly different because of the language adjustment. Format is same, but how I finally found out the answer was by applying the language adjustment. So see, this is where you'll find interesting variations in different questions that you will be getting in the exams. Though not every exam will have these type of questions, but in 5, 6 uh, papers one time, you should expect this type of adjustment, right? Now we come to the second part, which is relating to raw material. Opening stock of raw material again at the start of the year and the closing stock at the end of the year. So same like for production, here even for raw material, the stocks are given at the start and at the end of the year. What you are saying, Minu? 80% of last one is 36 and 20%. But it is not required, na, Minu. Why will I now find out the 20% here? Because that is not required. I want production. I got it now as balancing figure. So let us not waste time in getting that 20%. It is not required by me now. I was doing that to get the production, which I have already got from the format, right? Okay. So now I have stock details of raw material. The standard is given. Each unit of finished output requires 2 kgs of raw material. Okay. So my raw material consumption budget will be done very easily. So if I have to prepare my particulars, quarters, how do we find out raw material consumption? It will be production into 2. Production is this into 2. So it is 63. Again, this into 2. This into 2. This into 2. Correct, students? So consumption done. Now I want purchase. Again, for purchase here, there's something different. We cannot go by our regular format. Why? Same like for production here, there is some language adjustment for production purchase. The company proposes to purchase their entire annual requirement in first 3 quarters only. That is, purchasing will not happen in all 4 quarters. Purchasing will happen in first 3 quarters only. How? They have given the proportion. What it says, purchase of raw material percentage, and it is purchasing percentage of your total annual requirement. So whatever annually you want to purchase, you purchase it in this proportion in every quarter at these respective prices. Now, I prepare my annual purchase budget. How I'll prepare my annual purchase budget? I will follow the format that we have for purchase. That is annual raw material consumption plus desired closing minus opening. I will get annual purchase quantity. Correct? Now, what is my annual raw material requirement? It is the total of this. The total of this is my annual raw material requirement, right? Okay. So Shamli has given me this figure as 3,30,000 kgs, right? Now, what was the closing for the year? The opening stock was 10, closing was 5. So 5 is closing, opening for the year is 10. So this is 325. Yes, Shamli. So Shamli has given these values. So Riddhi, what you want to say? I did not get your point. I did not get what you want to say, Riddhi. Production. Meenu, what did not get in raw material? Yes, Riddhi, I have unmuted you.
गुड मॉर्निंग सर।
Good morning, beta. Tell me.
सर स्टडी मटेरियल में इलस्ट्रेशन 4 है,
Hmm.
वो मतलब जो आपने सवाल दिया बिल्कुल सेम उसकी तरह है, बस उसमें ओपनिंग फिनिश गुड और क्लोजिंग फिनिश गुड का स्टॉक जो है वो अलग अलग है। और यहाँ पे जो प्रोडक्शन बजट उन्होंने बनाया है मतलब हमारे जैसा ही बनाया 80-20 लेके,
Hmm.
पर जो लास्ट क्वार्टर है उसमें उन्होंने 80% तो मतलब क्वार्टर की सेल के हिसाब से ले लिया और 20% में उन्होंने क्लोजिंग स्टॉक रख लिया है फिनिश गुड का।
पर बेटा, एक मिनट, अभी हमने जो किया वो ये है, करेक्ट?
यस सर।
तो हमने कैसे निकाला? हमने ये प्रोडक्शन क्वांटिटी निकाली, ये पूरा टेबल बना के, राइट? जिसमें यहां तक तो मुझे मिल गया था ये 80-20 करके,
यस
ये
सर।
मुझे 80-20 करके नहीं मिल रहा था। तो मैंने इधर ये आपका बोलना है, उन्होंने ये फिगर यहाँ पे ले ली 21,250 एज नेक्स्ट
यस
क्वार्टर,
सर।
करेक्ट? समझो
यस
मैंने तो
सर।
नहीं ली फिलहाल, मैंने तो नहीं ली। मैंने क्या किया, मैंने ये टेबल को कंप्लीट किया बाय दिस ओपनिंग क्लोजिंग वाला अपना जो फॉर्मेट है। अब इससे मेरे को एक आंसर आ रहा है 53,250। अब आप बोल रहे हो मॉड्यूल में सिमिलर सम है, जहां पे
यस
उन्होंने
सर।
ये क्लोजिंग स्टॉक इधर लेके यू आर सेइंग दे हैव कंप्यूटेड दिस प्रोडक्शन। तो अगर वैसे करेंगे तो ये फिगर अलग आएगा शायद।
सर
चेक कर
मतलब
लो।
मैंने ऐसे आपने जैसे किया मैंने वैसे ही किया था, पर फिर जब मैं मॉड्यूल देख रही थी तो मैंने ये देखा इसलिए मैंने पूछा आपसे।
नहीं, मैं क्या बोल रहा हूँ, तो आंसर अलग आ रहा है या सेम आ रहा है?
अलग आता है सर।
अलग आता है, एक बार चेक कर लेते हैं। इसका 80% इज 36
यस सर।
और ये है आपने कहा 21,250, यही लिया है मॉड्यूल में।
यस सर।
हाँ, अलग ही आएगा बेटा। बट आई डोंट थिंक ऐसे आना चाहिए आंसर, क्योंकि आप ये बैलेंसिंग फिगर निकाल सकते हो ना। अभी आपके पास एक बार सेल्स आ गया, क्लोजिंग आ गया, ओपनिंग आ गया, तब तो आप ये डायरेक्ट ऐसे निकाल सकते हो ना। व्हाई विल यू टेक दिस स्टॉक एंड फाइंड आउट?
सर मैंने ऐसे ही किया है, पर फिर जब मैंने मॉड्यूल में देखा तो मुझे लगा शायद ये गलत होगा क्या, मतलब इसलिए मैंने आपसे पूछा।
मेरे को एक बार मॉड्यूल, मुझे इलस्ट्रेशन बता दो। इन द मीन टाइम
इलस्ट्रेशन
मैं ब्रेक
4
में मैं
सर।
देख लेता हूँ क्या है, क्योंकि दिस इज पास्ट एग्जाम क्वेश्चन, वहां पे तो इट वाज डन इन दिस फैशन ओनली। बट लेट मी जस्ट रीचेक द मॉड्यूल इन द मीन टाइम, ठीक है?
Okay, sir.
But we proceed for the time being like this only. ठीक है?
Okay, sir.
Yeah. Minu, I hope your doubt is clear as you have mentioned. Good. Now, तो ये मेरा क्वार्टर वाइज कंजम्पशन था जो मैंने कैसे निकाला, प्रोडक्शन ऑफ क्वार्टर मल्टीप्लाइड बाय 2 kgs, जैसे ये एग्जांपल दिया है तो क्वार्टर वाइज आ गया. क्वार्टर वाइज टोटल गिव्स मी द एनुअल कंजम्पशन प्लस क्लोजिंग माइनस ओपनिंग, आई गेट एनुअल परचेज. Now I'll prepare this raw material purchase budget again, but this will be now quarter wise. अब quarter wise के लिए quarter 1, 2, 3. My entire purchase will be only in 3 quarters. How? This is my annual requirement. This annual requirement into the specified percentage will be my quarter wise purchase, right? Now, what is the specified percentage? The specified percentage is 30, 50, 20. So it is 30, 50, 20. Now this will be my quarter wise purchase quantity. So 325 ka 30%, 325 ka 50%, 325 ka 20%. So this will be 65,000. This will be 97,500. Correct. And this will be, yes, thank you, Meenu, 162,500. Right? Okay. Yes, Shamli, thank you. Yes, Riddhi, correct. Yes, Tanu, correct. Now, this gives us answer for the third part of this question also, that is raw material purchase budget in quantity value. You multiply it by respective prices, you get the value. Now comes the interesting part of this question, that is the stores ledger card. Now, what is given for stores ledger card? 1 second, students, just hold on. Sorry. So now this fourth part is going to be interesting. What is interesting in this fourth part, students, is that we will be, or we are required to prepare the stores ledger. If you remember your foundation, if you remember the material chapter, we have to prepare our stores ledger and we have to follow the FIFO basis. Now, the interesting part is this sum is of budget chapter, but they have also included some aspect of material chapter, because at inter level, you will find such type of questions which will be multi-chapter questions into one. So let us do that. So this is my fourth part of this question. Priced stores ledger by the FIFO method. Now, what is the format? You have particulars, you have receipt, you have issues, and you have balance. Within each, you have quantity, price, value, quantity, price, value, quantity, price, value. Correct? This is how we prepare our ledger, stores ledger, if you all recall. Now, moving ahead. Opening stock. How much is my opening stock of raw material? My opening stock of raw material was 10,000, right? Yes. And they are saying closing stock will be 5,000. Now, this opening stock is at what price? It will be at the first price, that is rupees 2. In fact, they have given the value. It is 20,000, so it means it is at 2 only. So opening stock 10,000 at rupees 2, so value is 20,000. Now comes quarter 1, quarter 2, quarter 3. Now just pay attention. We have just determined how much quantity we will be purchasing. This will come in the receipt column because what you purchase becomes your receipt. So just pay attention. So this 97,500 will be my receipt first quarter. This 162,500 is my receipt second quarter. And this 65,000 is my receipt third quarter. At the respective prices 2, 3, 4. Correct? These were the prices given. So 2, 3, 4. Now, what will be my issues every quarter? The issues will be whatever I am going to consume. So whatever I will be consuming every quarter, that I will be issuing from the stores. Now my first quarter's consumption is 63,000. We are following the FIFO method. Now opening stock was 10, purchase is 97,500. So you are using 63 from both. But since the price of both is same, it doesn't matter what is being used because both are at same price. So I've used this 10,000 first and then balance I've used from here, right? So I'll get closing stock at the end of my first quarter, which will be 10 plus 97,500 minus 63,000, correct? So it will come to 34, 44, 500 at the price of 2, right? 44, na? 44, na? Or 34? 44, correct. Not 34. We have again typed 34. Minu. It is 44 because 10,000 opening stock plus your first quarter purchase minus your consumption. So it has to be 44. Now, in second quarter, my consumption is 76,500. This 76,500 will be made up of 44,500 at rupees 2, which is the opening stock, and the balance from here. Now, out of 76,500, I'll just write the total. 44,500 I've taken from opening. So the balance, how much is the balance? The balance is 32,000. This I'm taking from here. So it is at rupees 3. Now my closing stock will be 162,500 minus 32. So it will be 1,30,500 at the price of 3. Correct? So this is my second quarter end. Now my third quarter purchase is 65. Third quarter consumption is 84. I have opening of 130,500. So I'll use this 84 out of this 130,500 itself. So it will be used at 3. Now my closing stock will be this entire quantity is in my closing because it has not been used. And from this 130,500, I've used 84. So the balance is my closing stock. So 46,500, correct, students? 135. Yes, I think this is correct. Yes. So 46,500 at opening stock price, that is 3, and entire 65,000 at the current price, that is 4. Now in fourth quarter, there is no purchase, correct? Only I have consumption. So this consumption is how much? 1,06,500. Now how I'm consuming this 1,06,000? 46,000 at 3, and the balance out of this 1,06,500. How much will be balance? The balance will be 60 at rupees 4. Now this is fully consumed, and out of 65, I've consumed 60. So my closing stock remains 5,000 at rupees 4. I hope this is understood. This is clear to everyone. This is my priced stores ledger card. Understood by all students? Anybody having any doubts, problems? Students, let me know. No doubts? Perfect. Understood everyone? So this is the fourth part of our question. That is the priced stores ledger card. Done? Great. Now let us go to another concept, that is the cash budget. Now what is a cash budget? It is very simple in this budget chapter. It is slightly detailed when you will study this in the FM subject, because actually it is mainly a part of FM. But since it is also a budget, hence we are also discussing it, understanding it here. Let us understand what it is. Now, if I have to give you the format, the rule of the format remains same. What was our rule? The period for which the budgets have to be prepared will be your columns. So if they are asking budget quarter-wise, my columns would be quarters. If they are asking budget month-wise, my columns would be months. So firstly, this is the formatting part. Now, what will be the content of cash budget? The answer is cash budget is nothing but putting your cash and bank account combined in a vertical format. So just pay attention. Now we all have solved cash bank. We have prepared cash bank ledger, which is in horizontal format. What is horizontal format? Horizontal format is you have the debit side, you have the credit side, right? So one side is the debit side, one side is the credit side. Now what is the cash budget? Cash budget is simply this. So my horizontal format is converted to my vertical format. Now anyways, you also have vertical format for balance sheets. I'm sure you all would have studied that. So my cash budget, which appears as debit and credit side in my ledger, if I place it like this, that is the debit side comes at the top, credit side comes below, it becomes a cash budget. Simple. Just visualize this. Formatting is very easy. Now, what is on the debit side? You first have the opening balance. Just remember one thing, even though we are saying cash budget, it is your cash and bank accounts combined because we are talking about receipts and payments. So basically, cash budget basically means receipt and payment budget. Just I'm writing all this for your logical understanding. Though it is called as cash budget only, but remember it is a receipt and payment budget, and that is why you have to keep this in mind that it is your cash and bank account combined, right? Now, what is the debit side of your cash and bank account? You have the opening balance and you have all the receipts which are flowing in. This is your debit side total. Now, what is there on the credit side? It is all the payments that you are making from your business. And finally, you will reach the closing balance. So simple. If you understand this, cash budget is very simple as far as the structure is concerned. Now, what is important is in receipts, what are the items that will be there? It will be your cash sales. It will be your collection from debtors, right, students? Then it will be all your miscellaneous incomes like rent, interest, dividend, all these things, whatever you are receiving. Then it will be loan taken from banks, from financial institutions. Then it will be your shares call money. So you make calls on shares, whatever share call money you're receiving, which will include the principal plus the premium. Many times shares are issued at premium. Then you have your debentures issued. Then you have the sale value of investments. So you may have sold your fixed assets, you may have sold your shares, etc., which you are holding as investments. So broadly, students, these are the various receipts. Now see, I am giving you an extensive format, which is also applicable to FM chapter. These things which I'm showing are generally not given in this chapter some, because this chapter is mainly from the costing perspective. So you may not have all these share call money, the debentures issued, etc., because this is majorly part of financial management. But since I want to give you a picture that this cash budget and financial cash budget is not different, you should not feel that over there you are solving something else. So I'm giving you a holistic view, right? Then in payments, what will be there? Payments will be towards creditors for. One is for the purchases that you are making, and one is for all your expenses, which is generally in our language overheads. Then you have payment of your wages and salaries. Then you have share redeemed So you may have done some buyback of shares, you have done some reduction of capital, you have debenture redemption, again principal plus interest, right? Then you may have fixed assets or any shares or debentures purchased during the period. You may have loan repaid, correct? So these are generally the payments would be happening. And then the final net will be the closing balance. And as you all know, closing balance from one quarter will automatically become opening balance of the next quarter. First quarter opening balance would be given. All these details you will take from the question, put down it in this format. You will get closing. That closing will become opening. Again, you will have details from the question for each quarter. You get closing. Is this clear to all students? So see, this is how a cash budget is. It is simply this. Cash and bank account combined and put in vertical format. So I'll just run through one of the questions so that you'll understand. So what it says, a newly started company wants to prepare the cash budget and it wants to prepare the cash budget from January onwards. That is why the data given are Jan onwards for 6 months. Now you are required or asked to prepare the cash budget taking the following estimated receipts and payments. Now I'll repeat, this sum is from the budget chapter. Students, I hope I'm audible. Acha, because my video was stuck, so I don't know. Acha, sir, and is my this sheet is also visible, no? Because at my end somewhere it got stuck. Okay, so students, I was saying, now this sum is from our costing subject, so it is much simplified. You don't have all those other adjustments and calculations which I just showed you in the format, but I gave you a holistic format which is also applicable for FM questions. Now here, what are the details given? So the details are they have given you sales, then they have given you all the expenses, material, labor, and both the overheads. So you are given month-wise data. Now the language, you have to be very particular. What it says, cash balance at the start of the period, that is in January, is 10,000. Now there is a new machine which will be installed and the cost is 10,000, 30,000. This you have purchased on credit, but you have to repay in two equal installments. First falling in March, second falling in April. Then there is one more expense which is not covered above, that is a sales commission, which is 5% of sales. Correct? Then there is also a share call made, where in the March you have made a second call for your shares, for which you will be realizing some amount, which is also including share premium. Correct? So these are some very simple adjustments, not much details given. Now what is important is, they have further said, this part is important. How much is the credit period? Now credit allowed by your suppliers is 2 months. Means what? Your payment for everything is happening after 2 months. But the credit you are giving to your customer is 1 month. So please understand, your sales are on 1 month credit and your purchases are on 2 months credit. Now how this will affect, I'll show you. Then what it says, delay in payment of overheads is also 1 month. So overheads are also being paid after 1 month. So 1 month credit, 1 month credit for overheads. And interestingly, for wages, it is saying it is a half month credit. Now what it means, we will see. I'm just putting down these things over here so that you understand what is there in the data. Okay. Yes, correct, Nino. Perfect. Now, with this, let us understand and solve our question. So see, this is your format of cash budget. I'll now re-prepare this format for this present question. So cash budget, we have to prepare from Jan onwards. So Jan, Feb, March, April, May, and June. Particular opening balance. Now in receipts, there are no cash sales. So we only have collection from debtors. Then we have our shares call money. So it is second call. And there is premium. You can combine it or you can write it separate. Right? Then in payments, I have payment to creditors for supplies. That is my material. Then it will be for overheads. Then it will be for wages. Then you had purchase machinery. So you have a machinery payment also happen. Now, pay attention. Opening value given is 10,000 in the month of Jan. So I'll put 10,000 here. Now, what did the question say? Credit allowed by suppliers is 2 months. With supplier, I've already written. Means what? So whatever purchase you made, whatever you make in February, when this will be paid, this will be paid in April. Correct? So I have to write these same figures, but not in the month when this purchases have happened, but in the I'm preparing cash budget, payment to supplier for material. There is nothing in Jan, there is nothing in Feb. Why no payments? Because I'm starting my business in Jan. At least this is what is appearing from the details. Now, my Jan purchases, that is these purchases of Jan, will be paid in March. So I will write this figure of January purchase April. Sorry, tell me, sir. I can hear you. Sir, what is not visible? Video is stuck. I can hear you, sir. Sir, I can hear you. I, okay. Sir, I can hear you. I will re-log in, sir. Okay. So students, let us go to the cash budget example. I explained you the format. Now we are on the question of cash budget. Now this is the costing version of the cash budget sum. In FM, you have more detailed example or more detailed question because basically cash budget is mainly the part of FM. But from this up, you will get an overview of how cash budget will be. And definitely when you do the same thing in FM, it will be much easier. Only some adjustments would be added. So as I was explaining, cash account and bank account combined. This is the debit side. This is the credit side. You have to just make it vertical. So now whatever is on the debit side will be at the top. Whatever is in the credit side will be at the bottom. So we switch to the vertical format. Just visualize this. You'll understand the cash budget format. Now coming to the details. Cash balance at the start of the business, that is January, is 10,000. They are saying a machine was installed for rupees 30,000. It was done on credit and it will be repaid in two equal installments in March and April. So I will show the machinery payment. Half in March, half in April. Correct? Then what it says, sales commission. I'll come to this later on. Paid within the month of the actual sales. Then 10,000 being the amount of second call, which is received in March, and share premium of 2,000 is also received. So the call money is 10,000, premium money is 2,000. And both have been received in March. So in March, second call money, premium money, both have been received. Then comes this main part, which is the main part of cash budget, that is of the credit period. Now what is given? Credit which is given by your suppliers is of 2 months. So here we are having 2 months credit. Credit that we give to our customers, which is of 1 month. Delay in payment of overheads is 1 month. So here also your credit is of 1 month. And for wages, it is half month credit. Now what it means, if I start with the materials, that is my purchases, what I have purchased in Jan, I will pay after 2 months. So it will be paid in March. What I have purchased in Feb will be paid in April. This will be paid in May. This will be paid in June. So I will be putting these figures in the month of their payments. So 20,000, 14,000, 14,000, 12,000. So 20,000, 14,000, 14,000, 12,000. Now there is no payment happening for material in the first 2 months because it is start of the business. So I have purchased material in Jan, but my payment starts from March because of 2 months credit, right? Then come overheads. For overheads, I'm allowed 1 month credit. So 1 month credit means I will be making payment of this in Feb. I'll be maybe making payment of this in March and so on. So I'll add up both 3,200 plus 800. So it is 4,000. Then 3,300 plus 900. So it is 4,200. Then 3,300 plus 800. So it is 4,100. 3,400 plus 900. 4,300. And 3,500 plus 900. So it is with 1 month delay. Correct? Now, wages. Now for wages, what is interesting? You are making payment of half wages in the same month. 1 second. half in the same month, and balance half you are making payment of previous month, because you are having 15 days credit. So previous month's half wages you pay in this first month or at the start of this month, and this month's first half wages you pay in the second half of this month. Correct? Now, previous there was nothing because this is the first month. So January's half wages you are paying in January, and balance half you are paying in February. Similarly, February's half wages you are paying in February, and balance half in March. March half wages you are paying in March, and balance half in April. Similarly, April half in April, balance half in May. May half in May, balance half in June, and June's half you have paid in June itself, balance you will be paying in July. Right, students? So material, wages, overheads done. Now we come for sales. Sales, you have 1 month credit. So January sales, you are getting money in February. February sales, you are getting money in March, and so on. So we have to shift it by 1 month. So 20, 22, 24, 26, 28. Okay. So 20, 22, 24, 26, 28. Correct? That is done for sales. Now, the only thing that is left is of sales commission, which is at the rate of 5% of sales. Now, what is the language for sales commission? It says sales commission at the rate of 5% of total sales is to be paid within the month following actual sales. So language is very important. So you are making payment of sales in a month, but which month? Following the sales. In simple words, the commission of Jan is paid in Feb. Commission of Feb is paid in March. How much is sales of Jan? 20,000. At the rate of 5%, commission is 1,000. It will be paid in Feb. How much is sales of Feb? 22,000. 5% is 1,100. It will be paid in March, and so on. 1,200, 1,300, and 1,400. So this will become your closing balance. So first month opening 10,000. Payments are only 2,000. So closing is 8,000. Now this closing becomes opening here. So you have 22,000 total, out of which payments made are 4, 6, 8, 9, 9,200. So balance is 12,800, and so on. So students, this is how cash budget will be done. This will remain same in FM. The formatting, everything will be same. Only some more details would be added considering the financial angle of that particular subject. Sorry. Is this clear to all students? Perfectly fine with all? Anybody, any doubts, any questions? Yes, students, anybody, any doubts, any questions, please put it across. So let us proceed. So you all are clear. Kim says yes. Okay, it is 8,000. Yes, brother. You are right. I made a small clerical error, which Mustafa highlighted well in time. So this will be now 18,800. Right. Fine, students. Understood by all? Let us proceed. Now we go to the last part of this chapter, that is functional budgets. Flexible budgets. Now, what are flexible budget, students? So basically, flexible budgets are where you are preparing budgets at different level. That becomes a flexible budget. Yes, Jaya has a very good point. Okay, sir, what if in cash budget the balance is coming as negative? It is very much possible, Jaya, that the balance will be negative because I mentioned at the start, it is not only cash account, it is cash and bank combined. Since it is cash and bank combined, wherever there is negative balance, we treat it as bank overdraft, right? Also to add, Jaya, when you will be studying FM, whenever there is a negative balance, there will be a language adjustment that will ask, you have to suggest that in every month, how much loan would be required. And how much loan would be required? That will be the negative balance that you will be getting in that particular month. So that is how, Jaya, the question differentiates between different types of subjects. Like in FM, you'll have all these adjustments. Here, if it is closing balance, we will simply treat it as our overdraft. That's it, nothing else. In FM, they will say that you have to give the figure of your loan to be taken every month. And in that case, whatever is a negative balance, you will treat it as your loan. Is this fine, students? Understood? Chalo. Let us proceed. Anil, beta, we did the same thing, but I think two of our students highlighted that the module has done it separately, but Anil, we did it in the same fashion. Okay, students, let me first deal with the topic at hand so that we should be able to complete the entire part in this lecture itself. Now, if you remember, I have mentioned that whatever flexible budgets we are going to prepare, they are all master's budget. What do I mean by masters? In flexible, since we are going to prepare it for different level, we will not prepare it for every function separately. That will be too much time consuming. That is not required by the management. We have to give them just an overall summary. So it is over here always the master's budget. Riddhi is asking, sir, in degree, we study cash budget and there we have to do working notes. See, but working notes are required everywhere, but working notes are required where the calculations are something very technical. Where the calculations are basic, you need not show working notes. Like here, for multiplying it by 5% or making it half, no calculation is required. Maximum, if you want to show, you can show it there in the bracket itself. Doing working notes separately for such small calculations will be too much time consuming. Let me tell you, it will be not possible to do it in exams considering the time constraint. Right? I hope it is clear. Tanu beta, I have just answered this that you are having negative balance in the future years, right? So wherever there is a negative balance, you will show it as negative. Why? Because we are treating it as overdraft. So Tanu, you continue with negative balance. I've already clarified this and already somebody asked me for the same sum. So I have given them the answer. Right? So if you have negative balance in, let us say, March closing or April, you will carry forward the negative, treating it as overdraft. Fine? Okay. Now, yeah, acha. Okay, so you're only informing. Good. Now, students, in flexible budget, what basically we are going to do? So one, the master's budget would be either a cost budget, that is where you are asked total costs at different levels, or you are asked to find out the profit at different levels. Now, what will be the format? Now, the format of a flexible budget will be, the columns are levels of activity. Now, what are these levels of activity? As I had mentioned in the previous class also, what is asked in master's budget? In master's budget, they ask you to find out what if you are working at a lower or at a higher level of operations, then what is your main budget? So here we will be given those levels. Let us say they are asking you to prepare budget at these levels. So my columns are the levels for which they are asking the budget. Now they will be giving me the activity levels in percentage and also maybe in quantity. So whatever data is given for your activity levels, you will write down that and that will be your columns. Correct? Now, once columns are done, as I said, there are two types of budget, cash budget, profit budget. Format for both is same with only one difference. If it is a profit budget, you will have sales as one of your values at the start. And from that, you deduct your total cost. If it is only a cost budget, then we will not have the sales. We will directly start with the cost. This is the only difference between both these budgets, cost budget and profit budget. Now, generally, for a flexible budget question, the cost that you are going to mention will be or should be categorized into variable and fixed. So generally, in your flexible budget questions, your bifurcation of expenses is into variable and fixed. Is this clear, students? Manishji, am I audible? Because at my end, again, my video is stuck. So I'm not able to understand if I'm connected. Okay, ठीक है. Okay, sir. ठीक है. I'll continue, sir. Riddhi, don't worry. Here I have already mentioned that it is not required to show small calculations. So only where there is some major calculation, like in this question, which we are discussing, I'll show you the calculation. Because it is a major calculation, we'll do a working note. For all small calculations like multiplying it by 5% or making it half, etc., you need not do any working. Don't worry. See, in degree, the questions are less, the technical difficulty level is less, and the time is more than sufficient. Means the 3 hours paper you can complete in 2 hours. This is what is the degree paper. In profession, it is exactly the other way around. Generally, the questions are lengthy, technically also complicated, and you are working on a very tight rope when it comes to timeline. So you need not do working notes for all small workings of 5%, half, etc. Don't worry. Fine. Now, students, once you have understood the format, let me take you to the question. Again, the solving is easy. Only you need to pay attention to some workings. Now, what is the question saying? Galaxy Private Limited is engaged in production of TV parts. Its 100% capacity is 10,000 units. So we know here what is 100%. So we can find out the quantity of other percentages. Now, the details are the rate of production per hour is 10 units. It means in 1 hour, your company, your workforce are manufacturing 10 units of your TV parts. The material cost is rupees 2 per unit. Labor cost per hour is rupees 8. Be very clear. Don't haste in reading. 8 is not per unit of final product. It is 8 is per hour. So to find out per unit of product, you have to multiply it by number of hours that we will discuss. Now what you are required to find out? You are required to find out cost. So this is not a flexible budget for profit. It is a flexible budget for cost. So sales will not be required. Our data will only include the cost details. At what levels? 50, 80, 100. Okay. And they want you to show fixed, semi-variable, variable. So we will prepare it as per their requirement. If this would not have been mentioned, we would have made it only fixed and variable. But they want you to show semi-variable separately. So you will show semi-variable separately. Also, they want you to show the overhead absorption rate. And that has to be calculated per unit. We know how to calculate overhead absorption rate. It is the overheads upon the base. The base is your number of units. Fine. Now, interestingly, what is important? When you have to prepare your cost and they want you to show the cost as fixed, semi-variable, variable. The question is, this is where the question differentiates. There are two types of questions. What is the question? The question is how to know which expenses are fixed and variable. Here there are two types of questions. This question, which we are solving, they have given names, but nothing else is mentioned whether these expenses are variable, fixed. Other questions, you will see they have already categorized the expenses into variable, semi-variable, fixed. Right? Similarly, here also in another question, they have already categorized the expenses. So these other questions which are below are easy because the first question is already answered. What question? Whether the expense is fixed or variable. But why I have purposefully taken this as the first question? Because here we are also going to identify which expense is fixed, which is variable, which is semi-variable, and then solving is very easy. Now, how to identify? Now, in these questions where they have already bifurcated, they will give you data of only one level. Like here, they have given for 80%. Here, they have given for 50%. Why? Because they have already given you the bifurcation, what is fixed, what is variable. But where they have not given you this bifurcation, this identification, they will purposefully give you data for different levels. Like here, they have given you data for 2 levels. Now, why the data is given for 2 levels? So that you can identify which expense is fixed, which is variable, which is semi-variable. Now, how you will identify? Answer is simple. You are given the expenses, the cost for 2 levels of production, 6,000 units, 9,000 units. Now, just observe. First cost is salary. At 6,000, it is rupees 3,000. For 9,000 also, it is rupees 3,000. Now, you very well know what it means. If the expense is remaining same at different levels of production, means the expenses has to be fixed. So where I find the expenses remaining same at different levels of production, I know what to call them. These are fixed without any doubt. Correct? Very good, Sham. Now comes the next part. Now the other expenses other than this are changing. So whether they are variable, not necessarily. They may be variable, they may be semi-variable. Now how to differentiate between variable and semi-variable? Because both are changing, but there is still a difference. The difference is, I'll give you one example. Like for consumable stores, at 6,000, consumable stores given is 3,000. And for 9,000, it is given as 4,500. So it is changing. Right? But what is interesting to note, it is changing in proportion to change in output. Means what? For 6,000, if it is 3,000, then proportionately for 9,000, how it much should be? It will be 4,500. It means the expenses has changed exactly in the same proportion. Since it has changed exactly in the same proportion, it is variable. But now see with power. Power has also changed. At 6,000, it was 3,000. At 9,000, it is 3,900. So power has also changed. But has it changed exactly in proportion of change in output? Answer is no. Means what? Simple maths. What is the simple maths? At 6,000, if the expense is 3,000, how much it should be at 9,000? Definitely it will be something else. So if at 6,000 the expense is 3,000, then at 9,000 it has to be something else. It has to be 4,500 if you exactly keep it in the same proportion. But it is not 4,500, it is less than 4,500. So it has varied, but it has not varied completely. So this is semi-variable. Correct? So it is semi-variable. Now on same lines, we will identify other expenses like repairs. For 6,000, it is 4,000. How much it should be then for 9,000? So if 6,000, it is 4,000. How much it should be for 9,000? The amount is around something 5,000 something, right? But here, it is not changing in same proportion. It means it is semi-variable. Next, shop labor. For 6,000, it is 1,500. So how much it should be for 9,000? Is it coming 2,250? Answer is yes. It means this expense has changed in the same ratio. So this is variable. Inspection. For 6,000, it is 1,000. So proportionately, how much it should be 9,000? It should be much higher, but it is not that amount. It is only 1,300. So it has changed, but it has not changed completely. So see how you will identify. Now, this is what is the special point of this sum. In other sums, this identification is not required because they are themselves given the identification. You have to simply solve. But here, the identification is required. That is why I took this sum so that you will understand both parts, the solving part, which we are going to do, plus the identification part. Is this clear to all students? Beta Meenu, it is the other way around. If it is changing in the proportion, it is variable. If it is not changing in proportion, it is semi-variable. It is exactly the other way around what you have said. Correct, na, Meenu? Yes. Okay. Lingar is also saying yes, he has also understood. Okay. So let us proceed now. Now we have identified what is what. What are we supposed to do? We are supposed to find out cost of production at three levels. And we have to show fixed, variable, semi-variable separately. So our budget is what? We will name it. It is your production cost budget, right? What are the levels they want? They want three levels. What will be the quantity at these three levels? That we will identify. And what is the bifurcation they want? We will show that bifurcation. So one is they want fixed. Second is they want semi-variable. Third is they want. Now, we have just done the bifurcation. We will put down the names. So salary and depreciation is fixed, correct? So in fixed, I will write salary. I don't want so much of gap. Let me rewrite. Now I have to make interim totals because they want total fixed. Let me call it as A. Now what do I have in semi-variable? I have power, I have repairs, I have inspection. So power, repairs, inspection. Total semi-variable B. And then variable. Now in variable, we have consumable stores, shop labor, two things. But besides this consumable stores and shop labor, you have two variable costs given at the start also. That is your material and labor, correct? So you have total four variable costs. Consumable stores, this is total variable. And then this will be my total production cost, which will be A plus B plus C. Right, students? Now, what are all these levels of activity? We want it for 50, 80, 100. Now, what they had given in this question, they had given that 100% is 10,000 units. So I know 50% will be 5,000, 80% will be 8,000, and this will be 10,000. Right? Clear to all? Right, Betani, you're right. Perfect, Lingar. Now, fixed remains same. So I have to simply copy paste. So 3,000 of salaries and 2,500 of depre. 3,000, 3,000, 2,500. So my fixed, no changes. Next, I will do variable. See, in exams, you should know where you will be requiring more time. I will be requiring more time in semi-variable. So I should first prefer doing the other things because every step has some or the other marks. It may be half mark, quarter mark, whatever. So by chance, for some reason, if I'm not able to complete this sum, at least because of step marking, I will be able to marks. Now, what was given for material students? For materials, they had given that What was given for materials? Direct material cost you rupees 2 per unit. So for budgeting this, it will be my production into rupees 2. Now, how much is my production? It is 5,000, 8,000, 10,000. So into 2, I get my material cost, correct? Then labor. Now for labor, what is given? Rate of production per hour is 10 units. Now students, this will give you the labor hours. So if I have to find out labor cost, I need labor hours into the labor rate. But how do I get labor hours? Labor hours I will get by production upon 10 units per hour. This is the labor working. And what is the wage rate given? Labor cost is per hour rupees 8. So wage rate is rupees 8. But for this, I have to find out labor hours. And for labor hours, they have said that my rate of output is 10 units per hour. So I can produce 10 units in 1 hour. So total production upon 10 will give me by number of labor hours. Now, how much is my production? My production is 5,000 units. So 5,000 upon 10. This gives me my number of hours into 8. Similarly, 8,000 upon 10, this gives me my number of hours into 8. And similarly, 10,000 upon 10 into number of, this is number of hours into rupees 8. This gives me my working. Correct? So correct, Shamli. So Shamli has given me the values. It is 4, 6, and 8. Perfect. Then I have consumable stores and shop labor. How much was consumable stores? So my consumable stores, how much was it? Consumable stores is for 6,000, it is 3,000. Now, once I know this, okay, for 6,000, it is 3,000. Then how much it will be for 5,000? It will be 2,500. For 8,000, it will be 4,000. For 10,000, it will be 5,000. Similarly, my shop labor was 1,500 for 6,000. So it is 1/4. So how much it will be for 5,000? 1/4. For 8,000, 1/4. For 10,000, 1/4. So students, you have to keep on securing step markings. See, please be clear at professional level and specifically when you're writing a paper, your perspective should be getting maximum marks. I've seen many times in subjects like accounts, students waste a lot of time in tallying the balance sheet. Don't tally. I repeat, don't tally if it is consuming a lot of time. Why? Because when you tally and you find that there is some difference, you spend more time in finding out the difference. Don't do that. Don't write the total figures. Leave it blank. If it is not tallying, go to the next sum. Because whatever time you spend in finding out the difference, it may take 5, 10 minutes, 15 minutes, 20 minutes. Possibly you may not find the difference. You have wasted those 15, 20 minutes. Also, it has added pressure to you. And how much marks you will get for writing the totals? Half mark. Yes, one of your figures may be wrong. So you'll also lose 1 or 2 marks. But in doing the process and spending between 5 to 20 minutes, you have wasted 20 marks. So don't do that. Let it be blank. Proceed to the next sum. So this is what I'm trying to show you from this sum also. I have written those figures which are easily available or which requires minimum calculation so that even if I find that less time is left, I may keep this sum blank at this stage and proceed to the next sum. Why? Because the next part of this sum requires a lot of time. And if I feel that the other part or the other questions which are having 4, 5 marks can be solved in lesser number of time. I will go to that question, I'll solve that, and then only I'll come back here. See, this is the skill which you have to develop for exams. Now for semi-variable, I require some working. So working notes. Now students, different questions will give you semi-variable in different fashion. Where in the question they have given the breakup of semi-variable. Like if you see the next question or all the other questions, they have given you breakup. How much is the variable or the fixed portion? Such sums are very easy to solve. Why? Because like here also in this question, in semi-variable, what is the breakup they have given you? These sums are easy to solve. But this question again, they have firstly not given the identification. We did the identification. But now even in this, I do not know out of this how much is variable, how much is fixed. So I do not know the breakup of semi-variable. And that breakup is required because without that breakup, I cannot find out the semi-variable at different levels. So I will have to first do the breakup of this semi-variable. How? I will have to use a mathematical formula. I'm sure this you have studied in the marginal costing chapter, whereby I will find out the variable portion. How? By this formula. Change in semi-variable cost upon change in units. This will give me the variable portion. And then once I get the variable portion, I can find the fixed portion. How? Semi-variable cost minus the variable portion of semi-variable cost. So using this formula, using this concept, you will be finding the breakup. Yes, correct, Anil. Yes, Lingar. Keep this strategy in mind. This is very important because see, knowing a subject is different and scoring in that subject is different. For scoring, you have to follow exam techniques, right? Now, we will do it for each of our costs. So for first power, variable costs per unit, change in semi-variable. So for power, you have 3000, you have 3900. So numerator is 3900 minus 3000. So this is change in the cost. Denominator 9000 units. This is the change in units. You get your per unit variable cost, which comes to rupees 3. You find out the fixed portion. How? You take the semi-variable cost, which is, let us say this 3900. You find out the variable portion. How? The units for this level is 9000. So 9000 units into the per unit variable, which you have just found out 0.3. Difference is the fixed cost. So 3900 minus 2700 is 1200. Same thing I'll do for the other two costs, repairs and inspection. Again, same working for repairs, same working for inspection. For repairs, 4000 and 4600. 4600 minus 4000 upon 9000 units minus 6000 units. So 600 upon 3000. 1000 and 1300. Correct? Now fixed cost. I'll take the semi-variable cost. minus the variable portion, which will be for 9,000 units. 9 twos are 18. So I get 2,800. Correct? Students, please keep on parallelly doing the workings just for cross confirmation. Yes, correct, Shamli, correct, Minu. 1,300 minus for 9,000 units. 1,300 minus 900 is 400. Now, students, once I have done this breakup, my job is over, because now finding out the semi-variable cost for each of these expenses at different levels will be very easy. So for 50%, 80%, and 100%. Now, how will I find out semi-variable? It will be variable, fixed. So it is total semi-variable. Again, variable, fixed, variable, fixed, total semi-variable. Correct? Now, see this. How much is the variable portion? The variable portion is 0.3. So I'll take that 0.3. Students, observe the manner in which I am solving. I'm not solving one figure at a time. I'm taking the common things together, because that is what saves time in exams. I will write the fixed portion. Now, how do you get semi-variable? You multiplied by the units. You multiplied by the units. Correct? And then the total of this is the semi-variable cost. So 1,500 into 0.3, sorry, 5,000 into 0.3 is 1,500. 1,500 plus 1,200 is 27. 8,000 into 3, 2,400 plus 1,200. 10,000 into 3, 3,000 plus 1,200. So I get the semi-variable cost for power. 27, 36, 42. 27, 36, 42. Right, students? Then comes repairs. Same thing I'll do. I'll take the variable cost per unit, which is 0.2, multiplied by the units. Meenu, I hope you can see where I'm doing a working note and where I'm not doing a working note. See, in exams, timing is the key. Maybe in your degree exams, you would be doing working note for many, because as I mentioned, the papers are not comparatively so lengthy and difficult. Here, both things are a challenge. So here you have to be very particular with the timings part. Uh, Students, please parallelly cross-check. Correct? So 0.1, 0.1. Fixed cost is 400. So this is 5,000 into 1 is 500 plus this 900. 500, sorry, 800 into this and 1,000 into this. And 900, 1,200, 1,400. So students, this is how your workings are done. I hope you all understood this whole part relating to flexible budgets and most importantly, how to do the breakup. Is this fine, students? Anybody, any further questions in this? Yes, Meenu. Very good. Perfect. Yes. Now, let us take up some MCQ questions. I've shared this also. So students, you should be able to even solve the MCQ questions. So let us take few MCQ questions before we conclude today's session. So this we studied in the first part of our class, some theory part, based on which you have some MCQ questions. These may be straightforward MCQs or these may be based on some case study. So first they will give you a case scenario, and in that case scenario, there will be questions from different parts. Generally for budget, you have straightforward MCQ questions, but it may be also part of case scenarios. So what is the first MCQ? Which of the following best defines a budget? It is a plan of actual results. It is a record of past financial transactions. It is a financial and or quantitative statement prepared prior to a defined period of time to attain objectives. And it is a statement of expenses already incurred. Definitely, it is not for something which is already done. It is not for something which is past. Yes, it is a plan for actual result, but more precisely, it is a financial and both quantitative. This is what we discussed at the start, that budget, what we have understood is only relating to the financial part, but that is not the thing. Budget is both financial as well as quantitative, right? Okay. So next, budgetary control primarily involves what? Only financial transactions? No. Comparing actual results with budgeted results so that corrective actions can be taken. Preparing annual reports, recording non-financial data. No, we are talking about control. Control is about comparison. Again, if you remember, see, all this is based on our first class discussion. That is the theory part. So if you remember that, if you understand the concept, it will be easy. Yes. Jaya has put me a question on zero-based budgeting. So let me take you to zero-based. Others are very pretty straightforward questions. So let me take up zero-based directly so that Jaya's question is also answered. Now, students, what is a zero-based budgeting? Please understand the concept. Zero-based budgeting is where you are preparing the budget without any reference to the previous budget, without any reference to the previous year's actuals. Now, what it means? See, normally how budgets are prepared. So let us say I have to prepare a budget for the next financial year, which is 26-27, which will start from 1st April 26. Now, if I start this budgeting process, the general ideology, general methodology of preparing budget is I see what has happened in the past. So let us say in the past, I have incurred 25 lakhs on advertisement. I will say, okay, 25 lakhs anyways I was incurring. This time I will incur extra 5 lakhs. So my this year's budget is 30 lakhs. Generally, this is how budgets are prepared. In the past period, I incurred 50 lakhs on rent. So this year there will be 10% increment. It will be 55 lakhs. Now, this is how budgets are prepared generally. How? By making a reference to past. This is what is the normal manner. Now, what is zero-based? Yes, rightly pointed out by Ali. We do not make any reference to past. We do not presume that if in past 25 lakhs was incurred, now only 5 lakhs will be incurred. So my budget is 30 lakhs. Means what? See, when you always refer to past, in this current year, you have to give reason, justification only for the extra that you are spending or that you are estimating. So if let us say 25 lakhs was done in past for advertisement and I'm going to spend 5 lakhs more, my budget is 30 lakhs. If I'm going by the normal budgeting methodology, I will have to prove only 5,000. What I will prove? TS. Why 5 lakhs extra? Because this year I will be doing online marketing, which will incur extra 5 lakhs. So we are presuming 25 lakhs, whatever it was, will be same. Only extra 5 lakhs for digital marketing will be added. So we justify only the extra. This is what is a normal. But what is zero-based budgeting? Zero-based budgeting says, sorry, forget what you did in past. Let us start afresh. So don't give me this reason that 25 lakhs was already we were incurring on advertisement that we will continue. No, you justify that 25 lakhs also, because there is a possibility that, let us say, now you want digital marketing more, then you can reduce something from the physical marketing, like putting hoardings or giving newspaper ads, because that may not be so much relevant now. But when you are presuming that no, 25 lakhs we were incurring, that anyways will continue, but I will add 5 lakhs in digital, so I'll justify only 5 lakhs. But maybe 25 lakhs which you are presuming, if you continue that, you are wasting your money somewhere else, which may now not be relevant. So every time you justify things from scratch, justify things from start. So this is what is zero-based budgeting. You justify things from zero. You don't presume that, okay, since this was done last year, we will have that year again. So what it is, now what is the question? Which of the following statements relating to zero-based budgeting is false? Interesting. See, you have to be very careful in MCQ questions. You have to see what is false. So it is a method of budgeting whereby all activities are reevaluated. This is true. This is what I just explained. You have to reevaluate everything. You cannot assume that, okay, 25 lakhs was incurred in past, will be incurred again. So this is true. Zero-based budgeting attempts to eliminate unnecessary expenditure. Yes, as I said, when you re-justify even the past expenses, maybe something unnecessary will be eliminated. Then it requires a budget to be built up from scratch. Yes, it is also right, because you cannot presume anything. You have to justify every rupee. And then what is C, which is the answer? It is probably the least time consuming. Sorry, this is false. It is in fact the most time consuming, because what you have already spent, you have to justify that also. So you have to justify every rupee. So it will be more time consuming. It will incur more cost. Cost means you will require more efforts to prepare this budget. So that is where zero-based budgeting is nowadays being employed, where now every organization says, don't give me this reason that this was done in past, so it will be there. You redefine, you re-justify. That is what is zero-based budgeting. And yes, somebody asked me what is budget ratios, but a budget ratios is nothing, Jaya, different. If you remember standard costing, in standard costing, you computed the fixed overhead variances. You remember efficiency variance, capacity variance, those variances, same thing. Instead of taking difference, when you divide, it becomes budget ratio. Like, if you remember efficiency variance, what was the formula? Standard hours minus actual hours into the rate, right? Now, instead of subtracting, Jaya, standard hours minus actual hours was giving you the fixed overheads efficiency variance. Now you have to simply divide. So numerator standard hours, denominator actual hours into 100. That gives you the budget ratio. So how is your efficiency ratio calculated? Standard hours upon actual hours. Similarly, you are finding out fixed overhead capacity variance. How you are finding out fixed overhead capacity variance? Budgeted hours minus actual hours. Correct? Now, instead of subtraction, you divide. So budgeted hours upon actual hours. That will give you the capacity variance. So simply whatever was the difference, Jaya, that was variance, now you simply divide it. That will become the budgeted ratio. So actually it is linked with standard costing chapter, but since the name is budgeted ratios, generally we assume it to be part of budget chapter. Fine, students? No, Riddhi, there is no practical question on zero-based budgeting. No practical question. It is always a theory. It is MCQ only. Yes, Tanu beta. I have unmuted you.
गुड मॉर्निंग सर।
Very good morning, beta. Tell me.
सर मेरा एक छोटा सा डाउट था कि
बोलिए ना।
अभी आपने बोला जीरो बेस्ड बजट में हम लोग प्रीवियस ईयर के फिगर्स को नहीं लेते हैं, तो हमने ऑडिट में मतलब पढ़ा था कि उसमें जो ऑडिटर होता है वो प्रीवियस ईयर के फिगर्स से एनालिसिस करके वो इस साल का ऑडिट करता है। तो फिर इस केस उसमें ऑडिटर कैसे मतलब ऑडिट करेगा कि प्रीवियस ईयर के
Understand, beta.
फिगर्स तो
Your
हमने दिए ही
your question is very good, but you are mixing two things. See, budgeting is done by a budgeting committee. बजटिंग कमेटी का काम क्या है? उनको मैनेजमेंट को बताना है कि आने वाले साल में हम किस चीज पे कितना खर्चा करेंगे. सी व्हाई जीरो बेस्ड बजटिंग हैज कम? इट हैज कम टू इंप्रूव द एफिशिएंसी ऑफ योर बिजनेस एंड टू रिड्यूस अननेसेसरी कॉस्ट. ट्रेडिशनल मेथड क्या था बेटा बजटिंग का? कि जितना खर्चा मैंने हर चीज पे पिछले साल किया है, हम प्रिज्यूम कर लेते थे कि इस साल उतना खर्चा तो होगा ही, अब इतना एक्स्ट्रा करना है. तो हमारा जस्टिफिकेशन क्या रहता था कि इतना तो पिछले साल का खर्चा है तो ये तो छोड़ दो. छोड़ दो मतलब जस्टिफाई करने की जरूरत नहीं है, सिर्फ जो एक्स्ट्रा करना है उसे जस्टिफाई करना है. पर इसमें क्या हो रहा था, जितना आप पिछले साल का अज्यूम करके चल रहे थे, यू आर अननेसेसरी स्पेंडिंग. So in order to improve your efficiency, in order to reduce unnecessary cost, zero-based budgeting concept has come. Now coming to the auditing part. See, auditor का काम क्या है? ऑडिटर जब आएगा, जब ऑडिटर आपके कोई भी चीज को चेक करेगा, इस साल कोई भी चीज आपने जो दिखाई है वो सच है झूठ है, आपने उधर कुछ मैनिपुलेट किया है, उसके लिए ऑडिटर कैसे चेक करेगा? वो ये देखेगा कि अच्छा पिछले साल आप जो काम कर रहे थे उसमें इनपुट आउटपुट का ये रेशियो था, उसमें सेल्स टू ऑपरेशनल कॉस्ट ये रेशियो था, उसमें सेल्स टू समझो जीएसटी ये रेशियो था. तो उसे जब कोई चीज को समझना है कि इस साल के आपके फिगर सही चल रहे हैं या कुछ गलत चल रहे हैं या आपने कुछ कहीं पे मैनिपुलेट किया है, सो द ऑडिटर यूजेस द पास्ट ईयर्स डेटा so that he gets an idea what should happen in the current year. Now why both these things cannot be compared? Because budgeting जो हम जीरो बेस्ड बजटिंग कर रहे हैं उसका पर्सपेक्टिव अलग है. सी एक चीज समझो, मेरा बिजनेस एक ही पैटर्न और एक ही फॉर्मेट में चलेगा. जिस प्रपोर्शन में पिछले साल खर्चे हुए उसी प्रपोर्शन में इस साल भी खर्चे होंगे, एटलीस्ट एज फार एज द वेरिएबल कॉस्ट आर कंसर्न. जीरो बेस्ड बजटिंग से प्रैक्टिकली वेरिएबल कॉस्ट में फर्क नहीं पड़ता है. मेनली जीरो बेस्ड बजटिंग हेल्प्स यू इन सेविंग फिक्स कॉस्ट, क्योंकि फिक्स कॉस्ट में जब हम प्रिज्यूम करके चलते हैं कि पिछले साल ये था इस साल इतना ही होगा, वो काफी बार गलत हो जाता है. When the auditor is doing auditing using the past year's figures or past year's ratio, please understand this, that is only a basis for him to compare. On comparison, he will decide whether your figures that you are showing this year are true and fair or not. If not, then he will do further inquiry. So both are two different concepts. और ऐसा कुछ नहीं बेटा कि जीरो बेस्ड बजटिंग आया तो आप पास्ट ईयर के फिगर्स को नहीं देखोगे. तो zero based has a very limited application. It is not applied in every aspect of your business. Is this clear, beta? Zero based has very limited application. So for
ये
all other
मतलब
aspects,
कि हमें फिगर्स पिछली बार से ही कंपैरिजन करना है बट हम लोग बजट जीरो बेस के हिसाब से.
perfect. So it has a very limited application. Now you have got it right. Perfect, beta.
थैंक यू.
Yeah. Anybody else has a question, students? Okay. So we conclude our session here. I'm sure you all would have understood the entire subject with all the practical and the conceptual parts. Please practice from all the material that you have, the past exam questions, MTPs, RTPs. I'm sure that will help you a lot when you are handling your actual exams. So with this, thank you. Thank you very much. Please remain focused and remain committed to the goals of your life and your career. Good day. Take care. Done, Manishi. Thank you. Good day to you also. Good.